Hey traders, so in this video, I'm revealing how you can maximize your profits using the concept of volume. So, we all know that in order to become a profitable trader, you need to trade within a trend. But have you ever stopped and think about who is actually moving the market and creating those trends? Traders tend to forget that there are other people on the other side that is moving the market. So you can have all these indicators and trend lines, but at the end of the day, if there aren't any buyers or sellers, a stock will not move. And a good way to know this is to look at the volume. Before I start, I'd like to give a really important info that I rarely see from other trading channels. Volume only works on the stock market. It doesn't work on the forex market. Let me explain. So, a stock market is considered as a centralized market, meaning all the trades are routed towards one central exchange. However, a forex market is considered as a decentralized market, meaning there is no one location where the currencies are traded. So for example, if your broker is IQ Option, it will display a different volume than if you're using forex.com. Because the volume that you're seeing is actually the volume that people are trading with that particular broker. Let me give you an example. If you open TradingView, you can actually see that the broker is Owanda, meaning that the volume you're seeing here is the volume that people are trading with the Owanda broker. So this is why volume on Forex is completely useless, because the main goal of knowing the volume is to know where big institutions are putting their money. And if different institutions have different brokers, meaning there is no exact way of identifying how much total money is put in a currency. So in this video, I'm going to reveal how you can increase your chances of profits using a volume indicator that I personally use, which is the volume oscillator. If you open the volume oscillator on TradingView, this is what it looks like. We have a plot line and a zero line in the middle. For the settings, if you're trading using a longer time frame like the daily chart, you want to put your settings as 14 and 28. But if you're trading a shorter time frame like the 15-minute chart, then we're using the 5 and 20. So this is how you read the volume oscillator. First, you need to know that volume doesn't indicate the direction of a trend. A volume is basically like the fuel or the energy. So if the volume is low, meaning that the momentum is weak. And if the volume is high, meaning the momentum is strong. So to know the direction of the momentum, you need to look at price action. If the price is heading upwards and the volume is also increasing, meaning that it's a strong upwards trend. And if the price is heading downwards and the volume is increasing, this means that it's a strong downtrend. Remember, volume is like a fuel. So if the price is already heading downwards, an increase in volume will result in a stronger downtrend. A volume can also tell you how strong a trend is. For example, if a price is on an uptrend, yet the volume is constantly decreasing, meaning that it's a weak uptrend, and you should be careful if you're taking a buy position, because this could indicate that the trend may come to an end. It's also the same for downtrends. If the price is on a downtrend and the volume is decreasing, meaning that the momentum to the downside is weak. Therefore, you need to be careful if you're taking a short position, because a low volume could mean that the trend is coming to an end. So, a good strategy that you can combine with volume is with simple price action. So here's the Boeing chart, and as you can see, the price moved inside a range here, meaning you can draw support and resistance line here. And when the price was trading on a range, we can see that the volume is relatively low. Now look at what happened. The price broke out of the range area downwards while the volume started going up, indicating an increase in selling pressure to the downside. So this is a good opportunity to take a sell position. So let's move on to another chart. Here we have Bank of America, and as you can see, prices went down to this level and up again, making this a key support line. And as prices went back to this level again, we spotted a bullish engulfing pattern, which is a bullish signal, and the volume oscillator is also increasing. So let's do a quick recap. Prices are at the support level, a bullish engulfing pattern formed against that support level, and the volume oscillator is increasing, indicating a strong momentum to the upside. So this is a good opportunity to take a buy position. So the key to having a profitable trading strategy is making sure that all the signals are aligned. You cannot simply take a buy position because a bullish engulfing formed. You need to take into account other market factors like support and resistance. So that's how you combine volume with price action. And now, I'm going to give you a bonus strategy using another volume indicator called the money flow index. So how the indicator works is very simple. If the line crosses above the high line, meaning that the price is overbought and is more likely to reverse to the downside. And if the line crosses below the low line, meaning that the price is considered oversold and is more likely to reverse to the upside. But, like I said before, you cannot simply buy or sell based on the indicator alone. You need to take into account other factors in the market. In this case, we are also using support and resistance. So let's jump into a chart. Here's Netflix, and as we can see, prices approaches this zone here and it started to reverse, making this a resistance level. And now that prices are back at the resistance level again, this time displaying a fake out, where a candle went up here and closes again below here. And if you know basic candlestick patterns, you will know that this is a shooting star, which is a bearish pattern. Next, you can see a big red candle formed after that. And also, the money flow index is at the overbought levels, which further confirms that the price is heading towards the downside. So this is a good opportunity to sell the market. Let's look at another example. Here we have AMD, and as you can see, when prices hits this level, it reverses downwards, making this a key resistance level. So, as prices approaches this level again, we can see a slight momentum to the downside, while the money flow index is at the overbought levels, making this a good opportunity to take a sell position. So, I just revealed to you the best strategies that you can use with two volume indicators, and all I ask for in return is a very small favor of liking the video and subscribe to the channel. It literally takes only 2 clicks and it means so much to me. And in return, I'll produce more high quality trading videos like this every single week. So thank you guys for watching and I'll see you in the next video.